Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our update for November 29th, 2020. Hope everyone's having a great weekend so far. Let's take a quick look at how things finished off on Friday. We did see a slight move to the upside, a continuation of this trend higher. The Dow Jones finished higher by just about 38 points, while the S&P 500 finished higher by a little less than 9 points, but hovering right at that high, while the NASDAQ 100 managed to gain 111 points on Friday and is getting close once again to those all-time highs. Really no resistance standing in its way, so no reason why we shouldn't see that this week. The Russell 2000 also managing to gain another 10 points, doing very well lately here. Let's look at crude oil. Crude oil slightly lower on Friday, down just 19 cents or 0.42%, while gold was lower, significantly lower, down 20.5 points. So quickly approaching that 1750 area where we should see more support come in. The dollar index here on Friday, remember it broke that 92 level, remains there slightly lower. 91.79 is where we settled. So not a drastic move, but remaining below that 92 level. Remember, from there, it looks likely that we could be headed all the way down to 88 here. So lots of momentum to the downside, not much in the way of support standing in its way. So we'll see if there's follow through this week and start that move towards 88 cents. Let's take a broader look at the market here, starting with the materials ETF. And let me just go back here. There it is. Again, sitting near highs, and this is going to be a common theme. You're going to see most charts look like this right now. So this trend very much intact, very little resistance overhead, plenty of momentum still in place here. So it looks pretty good. XLC here, communications ETF, also sitting at highs again. The energy ETF pulling back again the last couple of days here, but now coming back once again to retest this level that used to be resistance but is now support. So I'd be actually surprised if we got to move back to the 20. I mean, that is possible, but I think there's enough support here to potentially hold here and turn around and make a move back above, what is it, about 47 or so, this level here. So there's still plenty of room to move there if it holds that level of support. Looking at the financials, XLF continues to make a move back towards those highs. Momentum in place still looks pretty good. Industrials looking great, still near highs. The tech sector, XLK, again, very much like the NASDAQ 100 chart, a little further behind here, but really, if you look at this, hardly any resistance overhead. So we should see this get back to the highs, if not beyond there. Consumer staples, giving us a re-entry on Thursday. Friday didn't really follow through, but momentum is there. I would expect that to continue to break out to the highs. Real estate sector still in that consolidation mode. Now, we are back to that 20. The 20 is sloping. I'd look for a re-entry at some point this week here, potentially a breakout above the highs of this recent range. It's been a while now since we've had any momentum to the upside. We do have some in place. As long as it holds that 20, we could see a bit of a move, potentially even to 42 on XLRE, which is the real estate ETF. Utilities pulling back a little and actually having difficulty getting back above that 20-period moving average. It's been about 3 days there now, and Friday actually closing closer to the lows of the day. Healthcare ETF, we got a new entry here. We do have slight slope on that 20, not a whole lot of momentum overhead. This looks good for a move higher, so that's one to definitely consider. And consumer discretionary stocks also sitting near highs, and there it is. We're back to the materials where we started. So let's look ahead here. News-wise this week, on Monday, we get Chicago PMI pending home sales here. And I thought Jerome Powell spoke. No, maybe that. Oh, no, that's on Tuesday. Okay, so Monday we have those two. On Tuesday, we get the Red Book report. We get manufacturing PMI, construction spending, total vehicle sales, and Jerome Powell will speak. Wednesday, we get MBA mortgage apps number and the ADP non-farm payroll report. So remember, that's always sort of an indication of where the main employment report or what the main employment report will show us come Friday. So the private payrolls, the ADP non-farm payroll numbers come out on Wednesday morning, along with factory orders, crude oil inventories, and again, second day of testimony for Fed Chair Jerome Powell. The Beige Book is also out Wednesday morning. Thursday, we get jobless claims number. Remember, those have been ticking up two weeks in a row now. We get ISM non-manufacturing number as well. And Friday, we get car and truck sales. And what else here? Trade balance, U.S. Baker Hughes rig count. But again, the main one on Friday is the main employment situation report. So we'll keep an eye on that. The only other thing really worth talking about here is the fact that pressure is mounting on Congress to put forth some sort of stimulus package as we get towards the holiday season here. Unemployment still at record highs here, and those lineups at the food banks are just horrendous. People need help, and hopefully they do come out with some sort of package. Obviously, that'll increase the deficit, but at this point, a lot of people need the help, and I do think if we do get some sort of stimulus package, that we will most likely see a bump in the markets on that news. So we'll see if that comes this week or not. Obviously, we have a live market chat coming up on Monday, 1 p.m. Eastern. I hope to see you there. But that's about it for now. Enjoy the rest of your weekend, and we'll see you on our next update.